Good morning, everybody. Welcome to the Flow Show, Wednesday, 22nd of January. And a bit of movement going on in markets at the moment. A bit of a grind up in a lot of pairs versus the dollar. So we'll take a look at that shortly. First, we'll get through all the news headlines, see what's actually perhaps driving some of these markets. China PBOC fixed 4 pips under 717. Overnight, so still keeping those fixes coming in lower after breaking under the 718 mark. Dollar China itself not doing an awful lot, still hovering around the 727, 728 level. PM Kishida is going to present an investment plan to Mr. Trump at the summit that they're going to be having with him and American counterparts. So they're getting in nice and early with the friendliness. Japan should slide by pretty unconcerned in terms of what Trump may do, tariffs and stuff. They've got a good relationship. They had a good relationship in his first term with Abe, both best of buddies and golfing buddies. So Ishiba will be hoping that that relationship stays in place and that they can get things done pretty quickly to avoid any angst there. Data over in New Zealand, CPI data. This is quarterly data for Q4. On the quarter came in as expected and a pip softer, but year on year higher than expected and unchanged over last month or last quarter, should I say. The RBNZ have their own model for inflation that showed better news, coming in at 3.1% for Q4 versus 3.4% previously. So moving in the right direction for the RBNZ. Over in the UK, more good news for the UK Chancellor. Net borrowing jumping once more to just under 18 billion. The net cash requirement as well, a big jump to nearly 20 billion, pouring more pressure on to the Chancellor Rachel Reeves, who says our public finances are now in order. According to those numbers, they're not, but whatever. I'm done listening to her bullshit for now. ECB, they've got a competition going to see who can speak the most, or how many of them can speak before they go into their blackout period ahead of next week's meeting. ECB's Nagel says there's a certain probability that the ECB will cut rates next week. And then came out with this coffee-spitting comment: Germany isn't the sick man of Europe. ECB's Not says he sees little obstacle to another rate cut next week. ECB Stornoas says interest rate cuts should be at the order of 25 points each time to get close to 2% by the end of 2025. So US tariffs would speed up interest rate cuts in the Eurozone. ECB's Escriva says 25 pip cut next week is a likely scenario. We had the head woman out as well, Queen Santan, saying that she's confident inflation will be at target in 2025 and the ECB isn't behind the curve on rate cuts. SMB's Schlegel, it's been sound like a broken record, says the S&P doesn't like negative rates, but we can use them. He's ready to intervene in FX markets if needed. Intervention worked in the past and we will do it again if needed. We cannot exclude the S&P using negative rates again, and says isn't discussing a new franc cap at the moment. Read into that what you will. A bit more data out yesterday, starting with Mexico. Retail sales coming in on the soft side, down 0.1% on the month, down 1.9% year on year. This is November data, so a little bit lagging, but not too good on those numbers for the Mexican consumer. We also got the Philly Fed Services Index, never on any calendars. That came in at minus 9.1 versus minus 6 previous, which was revised up a bit to minus 3.4. Employment, that came in 1.5 versus 3.2 prior, so a little bit lower. Prices paid also a bit lower, 28.9 versus 30.8 previously. Wages and benefits also dropping to 24.5 from 42.3. Over in Canada, the CPI data that came in a little bit mixed, a little bit all over the place. Headline CPI did come in a pip lower. Some had expectations of 1.8, some had expectations of 1.9. All in all, it came in a pip lower than last month. The BOC core number, though, went up to 1.8 from 1.6%. And then some of their other 25 measures of guessing inflation were a little bit mixed. The core common came in unchanged at 2%. The median came down 2 pips to 2.4, and the trimmed came down 1 pip to 2.6. So overall, just taking the headline number, we're at 1.8%, which is, give or take, bang in the middle of the Bank of Canada's target range of 1 to 3%. So really, they might indicate that they've done enough on rate cuts at the moment, but we shall have to wait and see the next BOC meeting, or whether they see any further issues with inflation that they need to chase lower with more rate cuts. Mr. Trump had a big infrastructure announcement last night. In the end, it turned out to just be about AI, that he's going to invest $500 billion in AI infrastructure, aiming to create 100,000 jobs. Usual suspects in line for that one: NVIDIA, SoftBank, OpenAI, a couple of the others. Microsoft are getting involved. They're all getting involved in this thing, creating a thing called Stargate or something to get AI going in the US. Later on from that, Mr. Trump was spouting about sanctions and this, that, and the other. He says he's likely to impose sanctions on Russia if Putin doesn't engage on the Ukraine. Says the Canada and Mexico tariffs coming February the 1st have nothing to do with the USMCA. So, as we've been saying, those tariffs, 25% tariffs, coming in purely on illegal immigration and drugs at the moment, nothing to do with trade. He did say he was considering a 10% tariff off on China. And then he insinuated that also may come on February the 1st, but I don't think that's a definitive on that. But potential 10% tariff coming on China. We'll wait to see what that's all about. And then, as expected, had a dig at NATO, saying they should spend 5% of GDP on their defence budget. Again, that's another bone of contention for him, how much Europe are spending on NATO, how much of their budgets they spend on NATO, given how much the US puts in. It was a bone of contention last time and remains this time. Mexican President Sheinbaum says Mexico is waiting to start formal talks with the Trump government. Expects a foreign minister and US counterpart to talk either yesterday or today. So I think that's probably likely to be today, unless I've missed some headlines. Outgoing PM Trudeau says he supports the principle of dollar for dollar matching tariffs on the US if the US hits them with tariffs. I'm not sure he's even going to be in the seat by the time that comes around, but we shall see. Ukrainian President Zelensky says he wants at least 200,000 peacekeepers for security. So talking about what happens if anything does get resolved. 200,000 peacekeepers. That'll be another bum fight on who pays for those. Russia's Deputy Foreign Minister Ryabkov says, as of today, there is a small window of opportunity for agreements with the new US administration. So the door is open. It may only be open a crack, but it's open. And this is something that we need to keep an eye on over the days ahead if they have a meeting and what comes at that meeting. Part of the Trump call with Xi had him telling China and Xi that they need to get a bit more involved in helping to end what's going on over there. So all in all, not much news. Obviously, the Fed heads are all on their blackout period, so it's nice and quiet for them. The ECB should hopefully all start shutting up from tomorrow, and or at least from Friday. Still got this Davos rubbish going on, which fortunately, apart from some of these comments popping out, I've managed to ignore for most of the week thus far. Right, what's going on today then? So we've got a situation where we've got a bit of a grind going on in some of these dollar pairs. Not moving all that fast, but they are taking out the levels. Aussie dollar is one I'm keeping an eye on. Just remarked in the room earlier. If there's a pair that might be worth looking at for a bit of a buy at the top situation for a continued move, it might be this one. Been highlighting this zone for long enough. Strong zone on the way down. It's looking one of the cleanest levels to potentially trade out of some of the others. But all a similar picture again. We are seeing a bit of a creep higher. So if it gets above this zone and starts holding, I might look a little long on that basis. But going through the list, we've got euro dollar up tapping the 104.50 level, which has been the area we couldn't get through coming into the new year. We're having a little go at trying to get through this time. Probably take this 38.2 fib into account as well. So maybe call it a bit of a zone, 50s, 60s. If we're clearing that and holding it, gives it the legs to have a move up towards the 105. And that's a different kettle of fish altogether. That's the bigger, more longer term zone. And a bit like that Aussie zone I've just shown. So that would be the bigger level to look at here. Cable as well, no excuses needed for this one to rally, but we've now run into the 38.2 fib of this leg from December and knocked itself on the head there and pulled back a little bit. It's playing nicely. We had this level 123, 0010, whatever you want to call it. Couldn't get above, couldn't stay above. This morning, we're holding it. So that's giving it the springboard to move up. And this is exactly the sort of price action I've been talking about. You want to see, if we're going to be moving higher, you need to get above and hold above these little levels here. We've got this minor level here, 123, 45, 50. That might become similar. But we've run into this zone. And for now, though, we're holding it. The bigger level is up at when we get up to 124.50, should we get up there. But it's on the grind. It's not giving too much for a dip. Again, I mentioned this in the room. It's looking like one of those situations where it won't give you a dip to get in, and then, you know, a few sessions later, you're another 100 pips higher, and then you get all the late chasers coming in, and that's when they usually get spanked. Remember the context for a lot of these moves. You're sitting here watching 15-minute charts, hourly charts, and you're looking at all this stuff going on here. Remember the wider context for a lot of these pairs. They are coming off big moves, and we are still only looking at potential retraces rather than trend changes. But trends have to change somewhere, and for now, it stopped going down. But we've had bounces like this before that looked good. Everyone thought this is the one, and then wallop. We've had several of these all the way through the trend, and it's a similar picture in a lot of these. So don't get too excited, okay? If you want to be long, there's nothing wrong with that, but just make sure you don't go out on a limb being long. You don't get long here, 123.70s, and say, I'm going to sit on it to 131, okay? Because if it doesn't get through the next level, then you might see another one of these, and then you're heading all the way back down again. So there's nothing wrong with being long. I'm not saying you shouldn't be long, but if you get some profit on the board, take some partials, lock in your stops in case it does reverse. But, you know, we could, if we start breaking some of these levels, something like cable, got a lot of room to roam, then it could see a decent pullback. The 38.2 of the bigger move isn't until 126s, so still quite a way to go. But yeah, pick your points if you want to try getting on this rally if you're not long already. That's why I'm looking at something like Aussie dollar and a break potential if it confirms, because then that just gives it a little bit more conviction that the move's going to continue on. Dollar yen, not doing an awful lot. Obviously, we're getting closer to the Bank of Japan and the expected rate cut. We did have a couple more sources pieces about how the BOJ are likely to hike on Friday, but the market's bored of those now. They're coming thick and fast. Once you've heard them 6 times, you don't need to know anything more. So the risks really are if they don't hike. Okay, the rhetoric this month compared to December, where we got similar sources pieces, is a bit stronger. We did get Ueda in sort of the last couple of days leading up to the December meeting, just pouring a bit of cold water after those sources. He's not done the same thing this time around. So it's probably 90% chance that they hike on Friday. But, you know, these lot are a cautious bunch, and it wouldn't take much to tip them into staying on hold. And but so far, anything from Trump hasn't been too hot on Japan, nothing much at all. So they look to be in the clear for now, which might give them clearance to go on and hike. But again, I'm not expecting a hawkish hike. I don't expect them to say we're hiking 25 pips and we got 4 more coming this year. It's all going to be slow and steady. This one will kick them over the spring wages, then they can find out about that, and then maybe they'll start talking hawkish about another follow-up hike. So I'm still expecting any decent yen strength on a hike, any sort of initial knee-jerk reaction, maybe not to last too long, depending on what the dollar's doing generally elsewhere and what yields are doing elsewhere too. So again, I still think that would be a potential dip buy. But now the market is on board with the potential for a hike, so I'm not sure how much knee-jerk will get, as that's what's expected. As I say, the bigger risk is if they don't hike. If they don't hike, we're probably going up through 157 pretty quickly. Dollar CAD, that's easing off again today, up and down and up and down. We're still in this range. If we're breaking below 42.60s, then we're potentially looking at a bit of a break of range, and then we might be heading lower. So that's one to keep an eye on there. We had a little test here. This is a quite a long-term level, so that's why it's being respected as well as it is. But below there, yeah, we're probably heading down low 142s, maybe even a bit more. Still some way to go. I've not even got a fib on this one yet because it's still miles to go for that. What else should we look at? Euro sterling, not a lot going on there. That's staying pretty tight, which again shows you that what's happening in euro, dollar, cable, all the rest is all a bit of a dollar move. Okay, we're not even seeing any speed difference in this one, staying very tight in this tight range. So nothing doing here. This is still wearing a bit of pound weakness from what's going on in the UK. So again, it's still more reflective of the fundamentals and what's going on in the UK than you're seeing in cable, because cable's rising, but nothing's improving here in the UK as per that data I showed you earlier. Derej, yeah, just showed that euro sterling. Hope that's enough for you, mate. Not a lot going on there. I might still fancy a little short at this 85 level. It's still a decent zone, and it's not doing much at all. But I'll see why we're going up there. If it is just a difference between cable and euro dollar, I might give it a little tap. But getting up to some of these levels here might put the brakes on what happens in either of these pairs if they hit key levels as well. Okay, so if this one's hitting up here, 84, 80, 85s, that might just put the brakes on what cable's doing. So you might just get a little bit of divergence in that trade on that one. Yields, keep an eye on those. They pulled up quite ahead of the 450 mark. Now that's more to do with what happened in the price, which had a bit of a failure. Oh, let's come in a little bit. Had a bit of failure at the 109 area around here, high 108s. Had a little poke, but 109s couldn't last. Okay, so price-wise, it's running into a bit of trouble here, and that's what's keeping yields just from maybe coming down a bit further. Okay, if we're getting below 4.5, then maybe something's changing, but I would expect us to be bouncing around this level because we're seeing a bit of washout of the Trump risk. You know, a lot of this move up in yields was the Fed, but it was also the Trump risk, and we're seeing that washing out a bit, but the fundamentals remain the same. The longer term fundamentals remain the same in the US. Still got sticky inflation, still got a Fed that's likely to go on pause, still got an economy that's still trucking along pretty decent. So there's a lot of people getting very bearish on the dollar, but just looking at the fundamentals alone right now, I don't see there's a cause to see the dollar to start collapsing. Obviously, if the economy tips over, or if Trump comes out, says or does something that's really dollar negative, that's about the only reason I can see it. So this is another one of those times where, yes, we're seeing moves in the markets, we're seeing the dollar weakening, but is there clear reasons why it should weaken significantly? And on the fundamentals alone, my answer is no. So we can see pullbacks in some of these pairs. We can see retraces in some of these pairs. And they may even go up higher, 105s, 106s or whatever. But what I would expect is at some point they will hit a bit of a level and the market go, that's enough of selling the dollar for now with these strong fundamentals. And then what I think we're heading for is probably a period of consolidation. So we might step up from here, so euro dollar, get above 104s, then we might just find ourselves consolidating, maybe somewhere 106s, 104s, something like that. And then we have a bit of sideways movement. So that's what I'm looking for going forward, but the levels will tell me what they're going to do and what the price is going to do. And if it keeps on going, then it keeps on going. Gold, can't miss out on gold, otherwise it will tell me off. That's seen a little bit of an acceleration. We had this move coming into the latter part of the year, December, coming into January, fairly strong. It's just picking up a little bit of speed in the last couple of sessions. You know, we've carved through some of these levels going back to this period, up above this one as well. We've got sort of last level at 27.70s, just where we saw this price action around here. It stopped a bit on the way up. It became support, bit of support. Then we had the breakdown. So if we get up to there and we go through that, then we're going for another look at those 27.90s up towards 28 highs. And just based on all this price action, it looks a question of when, not if, at this point. It's been a grind. It's been very, very shallow on the pullbacks. Again, it's not really giving you much to jump on and get in, but some of the levels have started to hold, have started to show up. So for me, this area here, I should probably stick a line in there, 27, 25, 30s, just where we've had these prior tops coming in. That's probably your main support now if we fail to hold any of these smaller levels. So if we're breaking back below there, then, you know, maybe we're done for now. But as far as this looks, I wouldn't be surprised if we're having a look up at these highs pretty soon. Stocks as well. I've still been running a buy stop through the 61s because that's, again, it's looking a bit similar to gold as well. You know, we're coming up towards these prior highs up here. That was a bit of a resistance point. 60, 70s, we're pretty much nearly on it. If we get through there, if we start making new highs here, then I think we're off and running again. So I'm still running a little buy stop through this area. This is looking a bit similar to my old 4,800 level way back when that came in as a decent resistance point. And then when we did get a break, well, the rest is history. Here we are up in the 6,000s. Brand Trump wants a weaker dollar, maybe, but wanting and getting is two different things. And as far as I'm aware, he hasn't really steamed into the dollar since the inauguration. Doesn't mean it's not coming, but the other side of the coin is it's hard to fight a strong dollar when his economy is doing quite well. He's been given a good starting point. It's his to lose. The economy is his to lose right now. And I think he might want to wear a stronger dollar if the result of that or the reason for that is that he's got such a strong economy. So let's wait and see on that front because he doesn't want to go and shoot himself in the foot on that. Just looking around some of the other stuff, we got UK stocks of FTSE powering on. Didn't really get a look back at this break point, so no chance for me to get in and try it along off of that. So off it goes without me. We're in uncharted territory here, so much like the S&P, much like gold, you're going to have to do a bit of chart work as these prices move up. Find out exactly where the levels are going to develop. So we may get one here around 85, 10, 12. May get another one here, 85, 45, 50. This is the sort of stuff you've got to do when you've got price moves that have no prior history to rely on. Okay, so you just have to build the picture up as it goes, as I say, much like I did with the S&P all the way up. I mean, it'll look a bit, I'll probably need to do a bit of a tidy up, but all this level, all these levels were just showing what was happening at that particular time. So yeah, it looks an absolute mess here if you look here longer, but that's what you got to do. You've just got to see where the levels are, see where the tops come in, see where the support wants to come in, build the picture up as you go, and that's when you get to your levels and find out where the points of resistance and support come in. So that's the job. If you're trading a FTSE, you'll have to do here. And well, let's just do a little, I've talked about it. Let me do it just to see how it turns out. Doesn't mean it's going to work, but you just look at the sort of areas where, you know, you've had a few tops, had a few bottoms just on the way up, and you just chuck a few lines in. It doesn't mean you have to rely on them. You wait until they're proven. So if we get a pull back to here, 85.48, and it bounces, well, that becomes a proven level. That gives you something to build on. And I get a lot of people say, "Oh, I'm only technicals. I'm only technicals. I'm not fundamentals," and blah blah blah. Well, you know, sometimes the technicals you have to build as you're going along, and you have to see what becomes the levels and what doesn't become levels. And if this one here, 85.30, if that just comes down and we whiffle through it, then I'll take it off because it doesn't mean anything. And if we bounce off this one, it becomes something. So that's what you need to do. Just, it doesn't matter. You don't have to say, I'm going to trade that level. It becomes just an area where you think this is where something might happen. If it does, well, then I'll use it again later on if I'm going to trade it. So that's got to do for the good old FTSE there. But we're seeing pretty much the same moves coming across all stock markets at the moment. They're all on a tear higher. All except China, that is. Doesn't matter who you look at. They're all up, up, up. As you can see, China through here having less than a good day. Nikkei up as well. It's all going the same way at the moment for most of these indices. I don't use extensions. If you're talking about fib extensions, Brian, I don't use extensions. Not my cup of tea at all on those. I like fibs. I don't like fib extensions because I use fibs to assess how trends are doing. Okay, you know, look at this here. We had a big move here, got back to the 50 retracement, but was it the end of the trend? Nope. And we came down here. Now that's a good, just looking at this, doesn't matter what you look at. This is the Hang Seng. Doesn't matter. Price action is all the same. This is exactly what you might see in something like Aussie dollar, Euro dollar. You know, you could get a big retracement. Does it mean we're breaking the trend though? This obviously means it doesn't. And here we are again. We've hit it again, gone through a bit, but it hasn't lasted. And now we're looking lower again. So this is why I use fibs, just to gauge trends. It doesn't mean you can't get big, decent moves that you can trade or run against, but it just tells you on the longer term or whatever time frame you look at how that trend is doing. Okay, if you're getting above this 50, then maybe you're going to be undoing the trend even more. It just gives you your indication of what's going on with trends. But like I say, look at this one. We hit the 50, big move, 2-year move and going up. Or here we've had, let's come in a little bit. Here we've had, a 2-month move, 3-month move. The best part of 1,300 pips. So yes, we could get a bounce back, but where's the 38.2 of that? 126. The 50, even higher, 128s. Or not even that, sorry, 127 60s. So this could be a decent move, from 121 to 125, 126, decent move, 500 pips. Not going to sniff at that, but is it going to break the overall trend? And that's where it gets dangerous. You don't want to be buying up here at 126 because you missed all of this, okay? Because that's when you get the latecomers coming in and going, oh yeah, I missed all of that. I've got FOMO, so I'm going to buy it up here. And that's when you run into trouble. It hits the fib, you're buying at the top, and then wallop, you get another leg lower, and we're down at 115 or something like that. Okay, so as I say, caution both ways. Be long, absolutely, if that's what you want to do, but you know where you're wrong if it's going to come back a bit. Main King, if the EU rate is coming and even if dollar continues to drop, does that mean we should look to other dollar pairs as euro may not make a good move? Well, again, this is where, and if we're looking at the euro, this is where you have to know what you're trading, okay? We've got a bounce in the euro, even though we know we're getting a rate cut from the ECB. Okay, so what are we trading here? Are we trading ECB rate cuts or are we trading the dollar? Okay, the dollar has been a lot of this move. We knew the ECB was cutting rates. They've been cutting rates for months now. We know where they're going to be cutting rates to or where they want to cut rates to. So there's no surprise. The surprise is the expectation. When we trade the expectation, that's when you get the main move. So a lot of this move, or a good chunk of this move low in the euro, was when the ECB was looking to start cutting rates, when they were going to start cutting, how much they were going to cut by. It's the expectation we're trading. The rest of it, we know the ECB are cutting rates. How much lower can the euro go now based on what the ECB are doing? Only if the ECB are going to be forced to go lower with rates, or if we see the data continuing to get worse, i.e. putting the euro or the eurozone in a worse position than they are now, will we see the euro coming down again? So, yeah, maybe, well, these days, even if you get a confirmation cut, the euro doesn't really move. And if the ECB say they're going to continue cutting, fine, we know all that. Okay, so at most you might get a pullback in this move, but I shouldn't think it's going to be much at all. But you've got to keep those fundamentals at the back of your mind when you're looking at this and seeing the euro rallying. The fundamentals in the US are still good. The fundamentals in Europe are still crap. Okay, so on that alone, again, you wouldn't expect to see euro going back up to 110 just based on the fundamentals. Okay, so it doesn't mean this is going to keep going up. It's more likely, or there's more potential right now based on the data, that it doesn't go much higher. Whether it can get down and carry on the trend is another question. As I say, might need some extra impetus to get that going. Further weakness in the eurozone or further strength in the US. But for now, there's no real ECB trade around here because everyone knows what they're going to do and what they're going to do over the next the next year potentially. So there's no surprise there. Right, anything else? Not sure what else to talk about. It's all been a bit of a slow grind. Aussie Kiwi. And again, similar position. So again, I'll reiterate the point. If you want to get out of the Trump trade, if you want to get away from the dollar, US assets, look at these crosses. They may not be doing an awful lot, admittedly. They all will move slower, but that's the lower volatility for you. So if you want something that's lower volatility, you're going to need a bit more patience, wait for the levels to show up. But when they do show up in these sorts of crosses, you do get a good chance to trade off of them. Okay, it's not like dollar yen, which might suddenly drop below 155 or shoot up above 146. You get time to maneuver in these cross pairs. Okay, several goes at 111 can't get through. I said we're likely to get a bit of a pullback after so many attempts if we can't break it. Although up here, I thought there's more chance of a break than a pullback. But levels are levels until they're not. We couldn't get through, we get a pullback. Couldn't get down to the next support area down here, though we did get under that 110.50. So if you want to trade, fine, you can be looking at longs here. If you don't get there though, well, it gives you a bit of a question. You don't want to get too caught up in a 20 pip range. You just wait and trade the edges. Have some patience. If you get a hold here, fine, that's something to do. If you don't get to your levels, you don't do anything. Okay, low volatility is good if you want to get away from the Trump stuff, but it just requires you having a bit more patience. Same for euro sterling, 84.30, bit of a level, 84.60, bit of a level. Okay, 30 pips to mess around with, or you wait until you get a bit of an extension either side. Okay, so that's why the crosses are good. They get you out the volatility, but you need to practice that patience at the moment. Derej, at the moment, I'm just doing a lot of short-term stuff. I don't have any real big long-term trades just because of the fundamental situation we're in. I like trading long-term. That's sort of my go-to thing. But at the moment, I'm not seeing any big long-term turns. My last big long-term trade was buying dollar yen down in the low 100s. That's before we got the inflation blip. So you're talking a few years ago now, because that I saw as a big trend changer. A big fundamental change to what we'd seen for the past 5 years prior to that. So that was something that I got into and stuck into. I don't see any big things like that on the horizon. It's more short to medium stuff. Like I'll look to buy Aussie dollar now off that level if we break and hold it. And it won't be a long-term trade. It'll be however long I can sit in it for if it goes my way. And if I sit in it and it goes my way and it takes 3 months to get to 66, 67s, fine. I'll hopefully still be riding that. The only one that I am, well, my Aussie Kiwi isn't a long-term trade, but it's one I'm happy to sit on while I'm still profitable, and that may still go my way if the RBA suddenly have to jump on the cut bus. And if they do that, then they might have to start cutting pretty quickly. And then my thinking is we'll see Aussie coming down to the old magnet. It's not happened so far. I've had a bit of success trading up here, running it up here, cutting on the dips and messing around with it. It's turning into a longer term trade than I would have liked, but it's not long term by design, shall we say. The only one I think is something I would look to build a position in is euro dollar. I still think that the Eurozone isn't going to do all that well this year, and that the ECB is going to be forced to cut rates further than they think, and maybe quicker than they think. And that would be the change, as I was talking to Main King, that would be the change in what the market's thinking now. The market's not expecting a pickup in ECB cuts. It's not thinking that the economy is going to get much worse. So if that happens, that will be the next driver for the euro to perhaps go through these lows and keep going. So that's what I'm looking at. So I'm watching the data carefully. I'm watching the levels. If we get up to 106 and there's no improvement in the data, I might start looking to build a bit of a short position to hold for a few months. But really long-term stuff, I've not got anything on the horizon at the moment. But that can all change pretty quickly. Bram, what's the Trump speech, mate? I haven't seen anything, but he could be out any time, as we know. What else? What else? If you guys and girls have got anything, we're a bit light on the old data again today, I think. I don't think we got much coming out. It's a very, very quiet week. Some NBA stuff, PPI from Canada. No, not a lot as well. So we are going to be waiting for a few headlines to come. Right, I think we'll call that a day anyway, because I've not got an awful lot else to say at the moment. I'm keeping an eye on the old dollar mix as well, though. One of the big risk currencies, big Trump risk currencies, shall we say. And yeah, we're moving again back off these highs. We still can't get above that 2080 and hold it, which is the significant price action. Can we pull the way back here? I don't know if Mexico's off the hook just yet. We may see a bit of relief coming if they manage to avoid these February 1st tariffs. But again, they're piecemeal stuff. It's stuff we've already known about: immigration, illegal immigration, drugs, and they've already been working to slow that process or limit that process already. So it's an easy win for them to get, potentially, to avoid those tariffs. But if they do, then we might see the MEX strengthening a little bit more. But we've got the USMCA and all the rest of it to come yet. So right here and now, I think on balance, even if we do get those tariff threats, a lot of it is priced in. So, you know, if we get another failure up here on some headlines, then that's got the potential for shorts to jump on. So I may even look at that myself, maybe get on some shorts in that one. And if we can't get through again, because then we would trade it out, all the threat there. And the only thing next on the table would be them getting a deal, which again would be good for the MEX. So I think with all this Trump stuff, we may be seeing peak fear in some of these moves up here. And that's as far as we're going to go. That can be all it takes sometimes to change a market around. Right, I'm waffling on again. Guys, have a great day. I'll catch you all later on Face. Don't do anything silly. Make lots of money. And we'll see you all tomorrow.